Gold has been on a 9-week streak. And you know what they say? What goes up must come down eventually. So the real question is, will this rally keep going, or is it time for money to start rotating somewhere else? What's good, YouTube? Julian here, and welcome to another weekly market outlook. Now, for this week, there's going to be a lot of things happening. We've got political headlines cooling off, potential changes in the US trade policy, and gold currently sitting at an extreme after a 9-week run. I'll be walking you through what drives these moves, what I'm watching next, and how you can position yourself smartly in this kind of environment. So grab your charts, take down some notes, and let's break it down together. Let's go. Now, if you like videos like this, I'm going to give you 5 seconds. Help me out by clicking subscribe and also commenting more so that I can produce more videos like this for you guys. 5, 4, 3, 2, 1. Without further ado, let's get back into the video. Let's start with gold. Gold has now entered its 9th consecutive week of gains, one of the longest winning streaks we have seen in the past 50 years. You can see even lines and lines of queues of people lining up to buy physical gold. Now, before you drop everything just to buy gold, let's take a look at some data. If we look back at the data from 1978 to 2024, 7 consecutive winning weeks for gold is extremely rare. In fact, it has only happened 9 times. Gold going up for 8 consecutive winning weeks happened only once, and gold winning 9 weeks in a row has only happened 3 times in history. Now here's where things get interesting. Every one of those rare streaks ended with a pullback. Let's take a look at some examples. In August 2020, after 9 weeks up, gold corrected about 22% over the next 112 weeks. In August 2011, after a 7-week rally, gold dropped a massive 45% and took more than 4 years in order to recover. Even smaller streaks like those in 2006 and 2007 led to pullbacks of 8% to 25% within weeks. On average, these pullbacks tend to be about 17%, lasting anywhere between 1 to 40 weeks. So if history repeats itself, we might be nearing a short-term cooling phase for gold. Not necessarily a crash, but a period where price consolidates or corrects after such an extended run. Now, here's the million-dollar question. If gold starts to dip, where do you think investors will rotate their money to next? So let's talk about what's happening on the Federal Reserve side, because there was a major piece of the puzzle. Recently, Jerome Powell hinted that the Federal Reserve could be ending a quantitative tightening, or QT for short, and preparing to transition into quantitative easing, or QE. Now, for those of you who don't understand what this means, during quantitative tightening, or QT, the Federal Reserve is basically taking money out of the system, and they do this by letting their bonds mature or by selling them, which reduces the amount of cash flowing through the economy. When liquidity tightens like that, it tends to put pressure on markets. The stocks slow down, crypto struggles, and investors move towards safer assets like gold or bonds. But when the Federal Reserve shifts to quantitative easing, that is the exact opposite. Basically, the Federal Reserve starts buying bonds again, which pushes money into the financial system. This means more liquidity, cheaper borrowing, more willingness from investors to take risks. So in simple terms, QE is like the Federal Reserve turning the money printer back on. And every time that happens in the past, investors are forced into relatively riskier investments to find stronger returns. For example, stock, tech, and yes, even Bitcoin. So if gold starts to pull back and new liquidity starts entering the system, the question becomes, where does that fresh money go to next? But there's one more factor adding fuel to this potential shift. So just recently, Donald Trump announced that he plans to meet up with President Xi Jinping, saying that the current China tariffs are not sustainable. That alone signals the possibility of a de-escalation in the US-China trade tensions. On top of that, reports suggest that Russia and Ukraine may be exploring a potential peace deal or at least diplomatic progress. Now, if both of these developments continue, this will also mean that there will be less global uncertainty. And historically, when geopolitical tensions cool down, gold tends to lose some of its safe haven demand because the investors no longer feel the need to hedge against war or trade conflict, and that money often starts rotating into growth and risk assets instead. So think about this. Gold is technically overbought. The Federal Reserve is shifting from quantitative tightening to quantitative easing. And now geopolitical risks are also easing. All of these three together form a strong setup for gold to pull back and a potential rotation towards Bitcoin, especially as liquidity begins to re-enter the system. Now, this doesn't mean that gold will crash or Bitcoin will go to the moon overnight, but the cycle tends to repeat itself. When defensive asset peaks and banks start to print money again, money will look for growth. And in today's market, where traditional yields are compressed and inflation fears are lingering, Bitcoin could be that next magnet for capital rotation. So keep an eye on these three things. Whether gold starts to finally pull back from these levels. Second, confirmation from the Federal Reserve that quantitative easing is indeed ramping up. And thirdly, Bitcoin price action, especially if it starts showing signs of accumulation while gold cools off. Because when those three align, history tells us that is when the major rotations begin. Now, I'm not saying that you should be selling off all your stocks, all your gold, and put it all into crypto. But hey, let's be real. Money oftentimes moves somewhere. So let's pull up the charts for SPY and some other stocks for us to see what the momentum is actually heading towards. And as you can see, the previous week had a massive dump. This was actually the week of the 6th of October. It actually dumped by about 3.15%. And last week ended up as a bullish weekly candle, which was a good sign. But currently, this just tells me that market is moving sideways. And in order for me to have a clearer direction on where the market is going, I will need at least for this resistance right here to break for it to continue its movement up, or this support right here breaks for it to continue its movement down to the next support. As you can see right here, last week, Nvidia almost ended bearish. However, it was a slight push up above and it ended up closing above the resistance that becomes a support. So right here, what this tells me is that there is still potential that Nvidia will want to go up. Next, let's talk about Meta. As you can see, the previous week ended up pretty uncertain because it ended up with this doji. But this week was actually pretty good because they actually ended up with a green bullish candle. So right now, this also tells me that Nvidia is moving sideways, up and down. And in order for Meta to want to go up, I want to see that this resistance be broken so that it continues its movement up. Otherwise, it will just play within this level of support and resistance that I just showed you guys. Google, another one, ended up the week with a very strong bullish candle. However, this again, like SPY, showing me that it wants to just move sideways for now until a breakout of this resistance for it to go higher, or break of the support, which means that it wants to go down lower. Now for Amazon, it's expected that it actually moved down since last week. It actually showed pretty bearish signs. Right now, the weekly candle closed in between the support and resistance, and I still foresee that price may go sideways for the time being while it decides what it wants to do for Amazon. Last but not least, let's go through Apple, which showed a very nice bullish touch. But this indicates that Apple also wants to move sideways. If it wants to break above, it has to close above this resistance for it to go up higher. However, if it wants to go down, it has to break through this support to continue its way down. Next, let's go through some of your requests. I can see a few people have asked me about IBIT. So let's go and analyze IBIT right now. So right now, IBIT is closing in between this level of support and resistance. Right here, we can actually see that this is an SRR, S, break R, forming a new resistance on top. So essentially, this is a good sign for those of you who are thinking of getting into some Bitcoin right here. this area seems to be a pretty good area to get some longs. However, if it does break through this area, we can actually clearly know that IBIT wants to go further down. Next, I want to go through a continuation of Bitcoin since we brought that up in the topic today. Over here, you can see that this was the area that I gave in my previous video. However, it's very clear that this area has now been broken. So which tells me that if Bitcoin has broken through that level, it will want to actually head down lower. So the next area that I foresee it will go to, which is right over here, I would say that this is a relatively good place for you to enter in some longs as well. As you can see, this is a SRR, new R. But mind you, if you're using this as a setup, this area has already been touched and price already went up. So right here at this moment is going to be what we call as a second chance or second entry for you, which in my books, second entries are always a little bit more dangerous. Just bear that in mind as you are thinking about investing into Bitcoin in itself. Right now for gold, on the bigger time frame, which is H4, it still seems a little bullish because price did respect this area and push up. However, I would say that in order for gold to want to go up, it has to break past this resistance right here. And if a failure to do so, gold will actually continue its movement down to the next support. But if gold does hit down, like I mentioned in the earlier part of the video, you realize that the best place to buy would be right about right here, since it is actually the demand zone for gold on the daily time frame. So if the price of gold does come back to this area right here, I think some entries of longs would be very good in this situation. Now, to be clear, this isn't financial advice and it's a hypothesis based on what we are seeing. Historical gold pullbacks, Federal Reserve policy shift, and Bitcoin's current positioning. Now, if the pattern holds through the next couple of months, should be very interesting for Bitcoin investors since Bitcoin is at a dip right now. So what do you guys think? Will the rotation happen or do you think gold will continue to dominate? Let me know guys in the comments down below. And also, let me know which asset you think will outperform next, gold or Bitcoin. Now, if you found that this breakdown is helpful, don't forget to hit the like and subscribe. It really helps the channel grow. And also, if you want me to analyze any of the stocks that you are interested in, just comment down below and I will go through the comments to find out what stocks would you like me to analyze. And while since we are still under a US shutdown, if you want to see what actually happens during a US shutdown, just click the link somewhere around this video and I look forward to seeing you guys in the next video. Bye bye.